What's up everybody, welcome to Money Management channel. My name is Andrei and today I'm gonna be doing an update on MMTLP and FINRA saga.
I got the cash in the bag, stadium packed. Born a rock star in this life, gonna live it up.
And guys, for today's video I have very interesting news that explains what happened to Orogrande leases and what happened to the oil and gas assets of NextBridge hydrocarbons. And you will see that well, the actions from the board of directors were not 100% transparent, and I will show you some details that not so many people paying their attention to. So, and before we dive deep into all of these, guys, if you want to know more about technical analysis, if you want to enhance your trading skills, feel free to subscribe to my YouTube channel and join my Patreon account. And guys, this is the post that I wrote on January the 30th. It is a public post that you can find on my Patreon. It is pretty much all trade alerts that I made from December the 1st to January the 30th. These are the results of these alerts. You can see that all of the trades were in profit except this one on December 19th. TRWV hit a stop loss order and we've lost about 1.33% on this trade, but all other trades are in green. That is why you can use these trades in your personal trades as a part of your due diligence. So guys, you've seen many of my trade calls, all delivering strong returns in just hours. Now it's your turn to trade smarter. Join my Safe Haven Patreon tier, built for traders who want consistency, structure and real results. You will get a detailed plan to protect your portfolio, monthly one-on-one Zoom sessions with me and private Discord access with all trade alerts, lessons and exclusive updates. And here is the best part. If you don't earn more than your subscription price within 30 days, you will receive a full refund, no question asked, as long as your trading account balance is at least $2,500 and you've taken all the recommended trades during the period. No excuses, no fine print. You profit or you don't pay. Join today and let's start building your edge in the market. So, and let's begin. Well, let me show you that for now we don't have a lot of updates from so-called non-litigational path to the resolution, the part of the community who pursue non-litigational path. Junk Savvy didn't post any updates for several days, and Vanderstill also didn't do anything substantial. And in my previous video I explained my position on N. Vanderstill's point of view because well, I have to admit that I don't think that N. Vanderstill is 100% unbiased in this case. She is trying to, well, she's trying to use just half of the facts that were violated by some authorities. And yes, unfortunately, the problem is not so simple, and I will show you this in a minute. First of all, let me pay attention to this tweet that was written by Roman Soups. He refers to the tweet that was written by Susan Trimbath. And first of all, let me pay attention to this one. Polycross poking the bear again, LOL. This time going after Susan Trimbath for receipts. Polycross can't help himself but to start trouble, LOL. Maybe when the MMTLP investigation is done, we will see more receipts for George, about George and the MMTLP scam. And he refers to the tweet that was written by Susan Trimbath. Let me show you this in details. She wrote, that guy I mentioned who didn't add anything to the case against the prime brokers, but the lawyer wanted me to share my whistleblower reward with. He's in the Epstein files. Now I'm twice as glad I stopped working with that lawyer. And well, we don't have any particular mentions who was this lawyer and what was the case against the prime brokers. And George Polycross asked this: could you please post a receipt, Dr. Trimbath? I'm having trouble finding it in the files. Given the gravity of such your statement and his role in our MMAT Nevada case, on behalf of the stakeholders, we would really like to get to the bottom of this as soon as possible. Thank you. And George Palikars definitely keeps in mind the Wes Christian's case and the bankruptcy case of MMAT. And it is quite interesting, but Wes Christian, he has again a lot of controversial actions that he made previously, and he made a lot of statements that on some opinions doesn't have any evidence. And Daniel Spears also, in response to this tweet, wrote this: "Is this the same who included this litigation founding document in his application for special counsel? This is my understanding that an attorney might not be paid for educational purposes from litigation proceeds, and I don't know how they are paid deemed spent when they took the case on contingency, which only pays if they win in litigation. No litigation has occurred yet in the matter case. I'm not a lawyer, so not legal advice." And let me show you another tweet that was reposted by Roman Soups, and in this case Puzzled Raccoon wrote: "Still hasn't Daniel Spears still hasn't connected the dots that the whole naked short and phantom shares narrative was completely made up by the lawyer she has rightfully identified as a scumbag, and she hasn't figured out that the share intel data was a part of the made-up nonsense propagated by that same scumbag lawyer to keep baggies blaming the naked shorts instead of the common CEOs that pay his lawyering fees. And she definitely hasn't connected the dot that George Palikars is balls deep in the fraud, just like the rest of them. And let me show you what is he talking about right now. Let me show you this. He reposted this thread from Grok, and he says, MMTLP, interesting thread. And let me show you what is this thread about. First of all, the first question was what is the relationship between CEOs and their boards and chairmen of boards? What oversight does a CEO have, and what responsibilities do a board have? And this is the definitions. Basically, it is a plain and simple explanation and the answer to this question. The second question was, what liabilities would the board and chairman have if two CEOs of merging companies were charged by the SEC of a fraud scheme that involved market manipulation, like John Brda and George Palikars? And this is more interesting part, but guys, I don't want to pay attention to this part as well. You can read this by yourself, and you can find this thread by Puzzled Raccoon if you search in Twitter account right here on your right side, this thread, this basically statement, interesting thread, MMTLP, you will find this tweet that he wrote on February 15, basically just yesterday. And you will see this conversation, and the most interesting part is the third question and the answer. Let me quote you this. What if the chairman of the board has a long history of shady dealings involving company assets as is presented with McCabe and Brda and the Arabella Petroleum legal issues? And here is the very interesting part. Let me quote you this in details. And by the way, you can see all the links that proves this story. So, if a board implications for board and chairman liabilities in cases of shady history. If a board chairman such as Greg McCabe in the Torchlight Energy Resources context has a documented history of shady dealings involving company assets, like the asset transfer and bankruptcy related issues with Arabella Petroleum, this could significantly amplify liabilities for both the chairman and the broader board in an SEC fraud investigation involving CEOs, for example, John Brda and George Palikars. Such a history raises red flags about conflict of interest, inadequate disclosure, and potential breaches of fiduciary duties, making it easier for regulators or plaintiffs to argue that the board failed to prevent or mitigate fraud. While liabilities aren't automatic, the hinge on evidence of knowledge, recklessness, or direct involvement often scrutinized under securities laws like sections 10b, 14a, and 20a of the Securities Exchange Act. Background on the referenced shady dealings. The Arabella Petroleum, and guys, this is the most interesting part. The Arabella Petroleum issues provide a concrete example of potential red flags. Arabella Petroleum Company, run by Jason Hosager, acquired Orogrande Basin leases cheaply in 2013 from university lands, then transferred them to McCabe Petroleum Corporation, owned by Greg McCabe, in 2014. Shortly after, Torchlight, with Brda as CEO and McCabe as chairman, bought the assets for a higher price, $3.3 million or $20 per acre, granting McCabe a 10% reversionary interest. Arabella filed for Chapter 7 bankruptcy in 2015, with the trustee alleging fraudulent transfer by Hosager to related entities, intended to defraud creditors while insolvent and without equivalent value. McCabe provided a declaration in the bankruptcy proceedings in 2022. A 2019 whistleblower complaint alleged misrepresentation of asset values, fraudulent transfers, and conflicts, with McCabe benefiting from notes, shares, and warrants through his entities. Brda has ties to prior SEC shut companies and fraud cases. And guys, you can see that there is a links to the evidence, and if you click to this link, you will see the article that was published by Bronco. And Bronco is the person who knows a lot about oil and gas assets, and this is his investigation. And by the way, this investigation also has all the evidence, all the links to prove these facts, and it is very detailed, literally 100% detailed explanation why the Orogrande Basin is and was an empty shell for the MMTLP case, and the board of directors, at least, guys, at least John Brda and Greg McCabe knew about this. Let me quote you further. So, Brda has ties to prior SEC shut companies and fraud cases. These dealings involved rapid asset flips and escalating prices, insider benefits. For example, McCabe's repaid promissory notes via company debt financing, and allegations of stealing producing wells. In the Torchlight Metamaterials merger, these assets were central, and McCabe was named in related class actions, settled for $3 million for false statements. Well, these facts are really mind-boggling. Heightened liabilities for the chairman. A chairman with such a history faces elevated personal risks, direct involvement in fraud. If the shady dealings, for example assets manipulation, tie into the CEO fraud scheme, the chairman could be charged as a primary violator under SEC rules for market manipulation or misleading disclosures. For instance, if Orogrande asset valuations were inflated based on questionable transfers, this could constitute aiding the short squeeze scheme. Control person liability. As a controlling person, for example, major shareholder and asset controller, the chairman could be jointly liable under Section 20A if they culpably participated or failed to prevent the CEO's actions, especially with known conflicts. Next one, breach of fiduciary duties. State laws, for example Delaware laws, could expose them to suits for self-dealing, like benefiting from company loans or asset sales without arm's length terms. The business judgment rule offers less protection if actions were reckless or conflicted. Penalties. Fines, disgorgement, director bars, or even criminal referrals if dealings involved fraud, for example bankruptcy fraud under 18 U.S.C. paragraph 157. In the Meta case, McCabe wasn't charged by the SEC but was in settled class actions. Liabilities for the broader board. The board's oversight role becomes more precarious. Fail to monitor or disclose. If aware of the chairman's history, for example, Arabella bankruptcy fraud allegations, the board could be liable for ignoring red flags such as insider asset deals or valuation height. This breaches the duty of care, leading to derivative suits or SEC actions for proxy violations. For example, not disclosing merger asset risks, aiding and abetting. Board approving transactions tied to shady assets, for example, merger approvals, without due diligence could face secondary liability. Independence issues. If the board lacks independence from the chairman, for example, due to his asset control, this weakens defenses, inviting claims or rubber stamping fraud. Consequences. Similar to CEOs, fines, bans, clawbacks, plus reputational harm. D&O insurance might not cover if willful misconduct proven, or ongoing MMTLP-related suits, boards face claims for control and personal liability. In summary, a chairman's shady history like the Arabella issues doesn't guarantee charges, but shifts the burden. Boards must prove robust oversight or risk amplified exposure in fraud cases. This underscores the need for independent audits and disclosures to mitigate risks. And guys, I don't want to comment on this summary, the summary of this pretty much very lengthy article, but I leave it for you. You can make your own conclusion based on all these details that I disclosed in this video, and you can write some comments in the comment section, and you will see how the people who doesn't like this story of well, some shady actions from the board of directors, they are trying to attack me personally in order to, I don't know, in order to shut me up, because they don't want to hear that they did poor due diligence back in 2022, and they relied their main intention was to benefit out of the short squeeze that was proposed and that was propelled by the board of directors itself. And we know as a fact that the investigation from SEC against John Palakers and John Brda is still ongoing. And we have a lot of evidence that Wes Christian, who was hired by John Brda and his flamethrower, didn't do anything to protect real shareholders. And guys, that is why Daniel Oxer, who filed a lawsuit, and you know his story, he's extremely quiet right now, but he's also an MMTLP shareholder who invested a substantial amount of money back in 2021, I believe, and he filed another lawsuit, and he will disclose some details when he will allow to do so. And I will definitely do an update in order to show you what's happening basically with this entire MMTLP saga. So I think that's all information that I want to provide you. If you like my video, please hit the like button and subscribe to my channel with notification bell. And see you guys and girls next time. Bye.
I got the cash in the bag, stadium packed.